But where was the gold? It wasn't there. You just give us the dollar equivalent and we'll go and get it in the market. I can tell you where I think it is. I think it was all bought by China.
The Trump administration might look to revalue the gold on its books.
No, that's absolute nonsense. Germany wanted a pretty good slug of its gold back, and France decided it wanted its gold back. Somewhere between 10,000 and 14,000 tons of central bank gold had been leased into the market, with very little of it returning. Rather than having gold, IOU notes replacing it. 1/3 to 1/2 of all declared central bank gold property, that's dead. The stock market, which undoubtedly has created a little bit of interest in the last year to 18 months. And you got bank deposits. And guess what? Interest rates have been declining, so that's getting less attractive. So you've got this sort of $5 to $6 trillion looking for a home, an investment home, in the savings of ordinary people. Where's that going to go? 35 to 45,000 tons? Because it's continued to accumulate gold.
Earlier this month, Hong Kong opened its gold settlement system. And this week, several Chinese banks will ban the trading of paper gold for retail investors. What's China's strategy here?
Well, it's fascinating. Everything's happening at the same time. I think it might be worth mentioning a few other things. One thing which I haven't really noticed many people mention is that the People's Bank of China has said that they're no longer vetting, if you like, the export of gold. In other words, if you're going to take gold out of China, you would have to get the agreement of the People's Bank. In other words, you get them to sign a form saying that's all right. You take that to the customs officer, and they will then endorse it. In practice, until now, no gold basically left China except little bits going into Hong Kong for the jewelry trade, because there were always people, if you like, going from the mainland into Hong Kong, buying jewelry VAT-free, sales tax-free. And that was perfectly permitted. That was fine. But other than that, China's been Hotel California for gold. It goes in and never comes out. This is a big change. The SGE has now said that, yes, you don't need to ask us anymore if you want to export gold. And basically what this means is that you've got a free flow of gold between the mainland and Hong Kong. So this is extremely important because it's going to give the Hong Kong market huge physical liquidity, potentially, anyway.
Could something far worse than a recession be approaching? While investors focus on interest rates and stock market swings, central banks continue buying gold, geopolitical tensions remain elevated, and global debt keeps climbing. According to veteran analyst Alasdair Macleod, these aren't isolated events. They could signal a major shift in the global monetary system. Here's why he believes gold and silver investors should be paying close attention.
Going both ways. So that I think is important. Why are they doing this? I think the answer is quite simple. You go all the way back to, the early days of China embracing capitalism. The one thing they didn't really embrace was the idea of fiat currencies. They knew that fiat currencies always fail. So they decided from the outset to protect themselves against the failure of fiat currencies by secretly accumulating gold. We're not talking about the PBOC's own foreign exchange reserves. We're talking about off-balance sheet, if you like. What in other country would be described as going into wealth funds. Though in China's case, this was, according to, I think it's Article 3 of the regulations, this was distributed around various communist organizations, such as the People's Liberation Army, such as the youth wing of the Communist Party, and so on and so forth. So this is something that happened up until 2002. At the same time as this gold accumulation occurred, the ordinary citizen was not allowed to own gold at all. So there was no competition against the state in terms of it acquiring its gold. Then in 2002, the Shanghai Gold Exchange was opened and citizens were permitted to accumulate gold. And since then, they've taken delivery of over 28,000 tons. Nobody knows how much gold China really has, but I did some back of the envelope type calculations, looking at various things like the foreign exchange flows, which also were the preserve of the People's Bank of China. Looking at the supply into the market, both from mines, which was a massive expansion between 1983 and 2002, and also sellers, investment sellers, particularly from Switzerland into that big bear market. Also, there was the gold leasing activity, because this was the original carry trade. You leased bullion at 1%, and you sold it into the market, and you bought US treasuries, which were yielding, well, in the early days, 10% or more. So, I mean, this was a very, very powerful carry trade, and it was obviously encouraged by the Americans, who were really trying to just get gold out of the monetary system and replace it with their own fiat currency. So China, if you like, its policy goes way, way back. Now, they would have known that they would need at some stage to protect their currency, the renminbi or yuan, whatever you like to call it, from the eventual collapse of the West fiat currency system. Until that time, they play along with it. They do exactly the same thing as all the other nations in terms of using the central bank, PBOC, to expand credit in desired directions. So the result is that, yes, they've got the backing, if you like, of gold in there. We don't know how much. My estimate originally was about 20,000 tons. Since 2002, they've obviously acquired yet more gold. They had a similar policy with silver, so they've got huge silver reserves, which we don't know. We don't know the quantity. That's managed more, if you like, as an industrial metal rather than a precious metal. But undoubtedly, I mean, bear in mind that the last standard that China was on was a silver standard. So silver is still in there, if you like, very much with that in mind. So we're now getting to the stage where, if you like, the future of the fiat currency system, and particularly the dollar, which is the king rat, if you like, of fiat currencies.
The Trump administration might look to revalue the gold on its books.
No. I mean, that's absolute nonsense, because for a start, you've only got to sort of try and work out, where was all the gold which was leased, where did it actually come from? Came from central banks, yes. But it didn't, I don't think, came out of Bank of England's vaults, but I'm pretty sure it came out of the New York Fed's vaults. And this is confirmed by Germany's experience of trying to just get, I mean, there were obviously negotiations. Germany wanted a pretty good slug of its gold back. I'm going back to what, 2013. And eventually they had to accept two things. First of all, they weren't allowed to go and see that gold. They were denied access. I mean, their own property, for God's sake. And the second thing is that it was 300 tons and it was going to take 7 years to get it back. What? Quite obviously, that gold had gone. And then recently we've had France. Now, this is an interesting one. France decided it wanted its gold back. And I guess that it had exactly the same problem, if you like. Because, I mean, the Bank of France is a major, major gold holder. A lot of it stored in New York. So it wanted its gold back. You're repeating, if you like, what President de Gaulle did in 1968. What happens? Obviously. And so, okay, I'm supposing, but, tell me if this is wrong. Obviously, they were told, oh dear, I don't think so. This is, it's a bad time or whatever. Well, the chap who cancer stuff is ill. I don't know. Whatever excuse they came up with. So what did France do? France said, Oh, okay. Well, I tell you what, you just give us the dollar equivalent and we'll go and get it in the market. Problem solved. But where was the gold? It wasn't there. I mean, bear in mind that, where is it? I can tell you where I think it is. I think it was all bought by China back between 1983 and the year 2002. There's an analyst called Frank Veneroso who looked at this in great detail. And he particularly interviewed the head of foreign exchange at the Bank of England, a guy called Terry Smeaton, who I used to lunch with occasionally. And Terry was, I found he's a lovely, open individual. He's dead now, unfortunately. But, Terry gave him a steer in terms of how much gold was being leased at that time. And he followed up this research, talking to banks and all the rest of it.
Alasdair Macleod believed China's latest gold policy changes are part of a decades-long strategy to prepare for a future where confidence in fiat currencies weakens. He argues that China has quietly accumulated large amounts of physical gold while expanding its bullion market through the Shanghai Gold Exchange and new trading reforms. Macleod also questions the true availability of some Western gold reserves, pointing to the history of central bank gold leasing and the lengthy repatriation requests by countries such as Germany. While these claims remain debated, he believes they highlight the growing importance of physical ownership over paper assets. With central banks continuing to add gold, geopolitical uncertainty persisting, and concerns over rising government debt and future monetary policy, Macleod says investors should focus on long-term trends rather than short-term price movements. His message is simple. If confidence in the financial system continues to weaken, gold and silver could play a much larger role in preserving wealth.
His conclusion by 2002 was that somewhere between 10,000 and 14,000 tons of central bank gold had been leased into the market, with very little of it returning. In other words, central banks, rather than having gold, have, sort of IOU notes replacing it. I mean, those figures, 10 to 14,000 tons, were 1/3 to 1/2 of all declared central bank gold at that time. So, how has this been resolved? It hasn't been resolved. It was obviously sold into the market as part of that carry trade, which I described earlier. And I think Frank Veneroso said at one stage, well, he didn't know where it had gone, but he said it's probably adorning the necks of Asian women, because India was always a big importer of gold. I mean, smuggled before the Gold Act of 1992. But actually, I think that the Chinese were very clever. They were quietly taking gold in. Remember also that they invested hugely in gold mine production, and from 2007 onwards overtook South Africa as the major gold producer in the world. They kept the government monopoly on refining, and as I said earlier, gold would go in and it never came out. It just accumulated and accumulated. And, you've got other holders there, because the SGE, the Shanghai Gold Exchange folks, have delivered something like 28,000 tons to the public. Now, most of that went into jewelry, but some of it into coins, small bars, whatever, branded, if you like. But you've also got savings. So you've got things like ETFs. That gold is all within the Shanghai Gold Exchange vaulting system. And importantly, the major banks offer gold accumulation accounts to their customers, which run alongside their deposit accounts. Now, bearing in mind that household savings in China run at a rate of over 30% of GDP, we're looking at an accumulation of savings in the order of between $5 and $6 trillion equivalent. So where does that go? I mean, there's no doubt that when gold gets a bid this time, the demand for it from people with gold accumulation accounts is going to take off. And of course, this is part of the whole scene, which is why they're getting rid of speculation, if you like, in the gold market. And just encouraging, if you like, or ensuring that the facilities are there for individuals to protect themselves from the collapse in our currencies. Now, they can't own foreign exchange because there are exchange controls. You need to have specifically permission from the People's Bank in order to do it. So where do individuals go? Well, I mean, they've got property. That's dead. That's a dead duck. They've also got the stock market, which undoubtedly has created a little bit of interest in the last year to 18 months. And you got bank deposits. And guess what? Interest rates have been declining. So that's getting less attractive. So you've got this sort of $5 to $6 trillion looking for a home, an investment home, in the savings of ordinary people. Where's that going to go? I mean, I think that there is probably already something like 5,000 tons within the SGE vaulting system, which is backing these gold accumulation accounts. I mean, I don't know what the figure is. I can only guess. But I'd pencil that in. I mean, we're looking at a situation where China suddenly the state has probably got 35 to 45,000 tons because it's continued to accumulate gold since 2002. You had 28,000 tons delivered into public hands. Now, some of that would have gone back in scrap, admittedly. So it's nearly 30, really, isn't it? And then you got gold accumulation accounts, you got ETFs, a few other things like that. I mean, they've got something like 70,000 tons, I reckon, out of a total above ground stock of 200 around the world. I mean, this is massive. It really is. They can protect their currency tomorrow. And incidentally, so can Russia. We get a lot of, disinformation about the Russian economy is in a state of collapse. But do you know what the government debt to GDP is? 18%. America, 125%. Who's got the problem? Your income tax in Russia is a flat rate of 13%. I think there's a higher rate of 15%. I mean, this is actually Austrian economists' idea of, sort of, if you like, free market conditions, low government intervention, and low taxation. Regulation, government regulation. Their bureaucracy is awful, but you don't have to come across it. No. Interesting, very interesting. The world is an upside down one to the one we are told about.
So talking geopolitically, what does the world look like in which China controls the most trusted currency or international trading system?
Well, I think it puts us back onto gold standards. And if we don't go with it, I mean, we're dead. And I can't see how we can go with it. I mean, the Bank of England sold all but 300 tons of its gold. As I said, I think that the US gold holdings are compromised, very badly compromised.
Whether you agree with Alasdair Macleod or not, his warning is clear. Watch what governments, central banks, and the physical gold market are doing, not just the daily headlines. Do you think gold and silver are preparing for their next major move? Let us know in the comments. If you enjoy expert insights on gold, silver, investing, and global markets, be sure to subscribe, turn on notifications, and join our community so you never miss an important update. Thanks for watching, and we'll see you in the next video.